Hey, thanks for making it to Veterans Info Tap. I'm glad you made it. We have David Piatek here with us. And you know, what an outstanding resource you are, David. And I will tell you, if you have not seen this guy talk about his wheelhouse of VA benefits with regard to the home loan process, you are missing out. From anything from purchasing rental properties, multiple unit homes, condos, refinancing, cash out, purchase, whatever you're looking at, this is the resource. All of his information is going to be below in the description as well as in the comments. But David, I want you to introduce yourself to the folks, give them a quick background, and I'm going to go ahead and steal your thunder a little bit and let the folks know that we're going to be talking about some predictions. So hang on with us. This is really important, right? Whether you are looking to do something today or in the future, and sometimes life throws you a curveball and you need to be ready. You might not be planning to do anything today, but 2 years from now, something might happen. So this is great information. Hit the thumbs up, subscribe, share with a friend, all that good stuff. We really appreciate it. Check out David's channel. It will be in the description and in the comments. David.
Awesome. Thank you, Jason, for the powerful introduction. Yeah, good to be back on the channel. For folks that don't know, I'm a loan officer. I specialize in VA home loans. So we help people across the country, and I have a channel, VA Housing Education, that focuses on military education around housing. And like you said, Jason, it's like it doesn't, most people get out and then they use the VA loan a couple years later, and some people get out and don't even know they have these benefits. So that's the reason we do these videos, is really to bring awareness. But to your point, let's talk about the 2025 predictions around housing, because we did a video not long ago talking about why buying in the wintertime is an important aspect, because it gives veterans more opportunities in a less competitive market. But some people may be like, well, you know what? I'm not going to listen. I'm going to continue to wait till the summertime. So, let's break that down.
Yeah. You know what? I totally get what you're saying. Absolutely. And I think that a great way to think about that, David, and I know you're going to dive into the whys behind it, but it's kind of like put yourself in a little bit of a tighter situation, make it a little bit more uncomfortable. Maybe your kids are in school and you got to deal with that. Maybe you got some other things going on. It's in the middle of the holidays. You want to just kick back and, watch the Super Bowl, right? Hey, if you rip off all of that stuff and you dive in to do it, you're going to probably be better off with the deal that you can get with regard to real estate. So sometimes if it's a little less comfortable, you're going to come out ahead. If you're too comfortable and it's too easy, well, maybe you're going to have to pay a little extra. It's just kind of the way that it works. So I'd love to hear you kind of chime in on how and why that is what it is.
Yeah, I know. So I'll let you guys know that, what's kind of the general sense that's out there for coming up is that home values are predicted to go up about 2.6% over 25, which is nothing drastic like during COVID, where they're up like 15, 20%. It was just out of control. Right now, they've stabilized a bit, but, the same thing kind of goes up. Timing is everything. And this is going to be a little bit of an increase, I think, than the prior year, and a little bit of a slowdown. And they predict that, at least in my mind, that more properties are going to be on the market. And I'll explain why. When you look at data historically, people always say, like, I'm going to live in this house forever. But the average time someone stays in a home is only 7 years, right? So if you do, and this also kind of leads into other things like, why wouldn't you do an FHA loan? People will say that, well, hey, it has private mortgage insurance for the life of the loan. I'm never doing that. Well, why? At 7 years, you normally build the equity you need to refinance out of it, or you sell the house anyways. Right? So it's kind of an average. So if you think about, 21, it's like 2020, 21, 22, still we're a couple years into that 7 years, but that's why we normally see either people growing and they don't want to be landlords and they don't want to rent their properties, so they're going to be selling those properties. So we're just going to have more, I believe, at least more properties on the market. But again, like you mentioned, it's the timing of things. If more homes go on the market during the spring and summertime, more people, there's more buyers naturally in that market also. So when, I talk to some people and like, I'm going in 10,000 on their list price. I don't really see you doing that during the summer, to the spring and summer markets, because you have other
Mhm.
people coming in a bit more aggressive because they want to get into home ownership with that. And yeah, you have your VA loan, 100% financing, tons of benefits. I have a ton of videos around that on the channel, a ton of positive things. But if you really don't know how to position yourself in a realistic manner, uh, you're not going to be able to do anything. It's like, if you, same thing like your VA disability stuff. If you're, if you have tinnitus, but you're trying to file for something crazy out of this world and it doesn't make sense, then, you're not going to get it, or you're wasting your time.
Right. Yeah, very true. Now, I have a question for you, and it's not really in line with predictions, but I think that this is an important piece that we haven't really ever covered. A lot of times, I think home buyers specifically get excited about looking for homes. They start looking online through all the different resources, right? Whether it's Zillow or Realtor.com or Redfin or whatever it is, and they're looking at houses and they're daydreaming stage, right? They have not gotten pre-approved, and they're not working with a realtor. So those two things, right? And I guess it doesn't necessarily need to be a realtor. It could just be a real estate agent. Just
Right.
want to throw out that. So
There's a difference.
there is. So I'd love to just, based on what I just said, I'd love to get your input on those few things: the
Yes.
approval, working with an agent, difference, all that stuff.
And I'll start with sharing a story, a heartbreaking story that
Oh,
happened yesterday.
oh no.
Yeah. So I had a veteran come. They were pre approved with somebody else. They came across the channel and they reached out. They've been working with an agent for the last year and they've been trying to get into buying a home. They've been making offers on the property. And, they didn't win a lot of them, but they were just kind of like, hey, how do we position ourselves to get us better? And they reached out. And the thing is that this lender told them that they were approved for a VA home loan when they weren't eligible to use the VA home loan because this lady got out 3 months prior to her contract. And it was heartbreaking because we reached out to the VA and they already denied it months ago, but
Mm.
they never told them. And I think it's I mean, I was upset about it, and she, the client, was upset about it. The agent was also a veteran. I just was like, I can't believe that we've been trying to do this for 1 year, and they knew about this the whole time. So I share that story because it is so important to work with people that understand how the program works. So when you guys reach out to myself, like, we actually dive in to the whole process. And the number one complaint we get from people is you ask for too much stuff. And guess what? That is a positive complaint because you want someone to review all your financial documents. Jason, like you mentioned, when you're trying to have an actionable plan, right? When
Hmm.
you are saying, hey, I am thinking about home ownership, that's the time that you reach out to someone like me, and then you kind of go through it. You don't wait till, like, hey, the last minute, you've been looking at homes, you've been putting off your having someone take a look at your stuff, and then you try to do something. That doesn't make sense. You want to go a year out, it's cool. You can do it. You get a credit inquiry, it's no big deal. It falls off after 90 days. Unless you're trying to make some kind of major purchase. But even then, it's a couple points, right? This is literally on TransUnion, Experian, and Equifax's websites. They're not trying to limit you, but you don't limit yourself. That's the biggest piece to that. And I always say, don't disqualify yourself because oftentimes veterans do. A good pre-approval, or at least having your financial picture reviewed, allows you to see what you can do today if an opportunity would come up, which, like I said, I'm always saying winter markets are the best markets. But let's say you're not looking for 6 months, you're thinking more of the summertime because it might be work related, like a PCS move or whatever the
Hmm.
case may be. or like, hey, I'm buying a property from my family. We actually seen a lot of that recently, which you can do with a VA loan. It's called an arm's length transaction.
Hmm.
So if we're related, I can actually buy the home. And I've seen a lot of estate sales happen that way as well with veterans in the last 2 months. So I find that interesting because we've never done it before, and up until 2 months ago, where we see a lot more of that.
Hmm.
But again, if you're not positioning yourself to have those, to be able to execute on that, or at least to have a realistic conversation, then you do waste a lot of time trying to do it. It's like, look, again, if I look at VA disability ratings and I don't do anything about it, and then I go file and I'm thinking it's going to happen overnight, it's not.
Right.
So, but again, that's another big benefit if you have VA disability, is to make sure you check the county, the city, the county, and the state for your benefits. Because a lot of veterans have flexibility to move anywhere, but they're not doing the research, and then they end up getting hurt because of that.
Right. Yeah. Great points. And I think that the number one thing is being informed and having the correct information in your hands so you can make an educated decision and an educated move, right, when it comes to purchasing a home. Before we jump off, I know we got limited time with you today. What about folks that are maybe in a higher interest rate that the current market is in? How easy is it for somebody to simply just lower their payment, right? I don't want any, don't add a bunch of money to my mortgage, right? I'm trying to pay this thing off. I don't need money. I just need a lower payment. Um, how does that work? Can you walk us through that process?
Yeah, so I'll touch on the interest rate reduction refinance loan. So this is also why it's very positive to use the V loan, because if you don't use it, on average, it costs you like over $20,000 in fees if you don't use the V loan the first time around. So that's one important note. So with an interest rate reduction refinance, an EARL as we call it, big benefit is that you basically do a rate and term refinance, but you potentially will add some closing costs onto the mortgage balance, but you have the option of lowering your interest rate. So one good way to see, how do I explain this? When you look online and you look for interest rates, I think the whole thing is a scam,
Yeah.
because like they include all these points and fees, little asterisks that you don't click. And I get these emails all the time, like, David, look what I got. And I'm like, yeah, that's not possible. You want to pay $18,000 in points to get that rate? Like, they try to get you. And they mail me stuff. And I'm like, this is, again, you look at the fine print, or I call them and they don't even offer those rates. So normally I check like mortgagenewsdaily.com. That's like it's a free website. I use it. A lot of lending professionals will use that. It kind of gives you what the average is. It doesn't bake in points or discount points, so just be wary. Use it as just a rough guide. So if your interest rate is, let's say, 7% or higher, as you know, just kind of as a general number, look at this and see what would my payment change if I got a lower interest rate. And another thing, Jason, is that what we've come across with these EARLs is a lot of veterans kind of really get scammed with equity stripping. We see this more often than we should. And that's where they offer you a great interest rate, but they charge you the points, but they roll it into the mortgage so it doesn't cost you anything, right? In bunny quotes here.
Right.
And then they basically just take that equity away, because you could use an EARL uh, unlimited times. But what ends up happening is that at some point, the cost of the program is going to outweigh the savings. And that's what you want to stay away from. And the other thing is that EARLs can be used on second homes or investment properties with the VA loan. You buy a property with a VA loan, right? They could turn into a second home or an investment property. You could still get the same typically primary rates
Wow.
on those, even though they're second homes or investment properties. So that's the power of that program
Wow. Huge.
for that. Now, one other thing I'll touch on is interest rates for 2025 and what they predict. And I'll tell you this: if I could predict it, we
Yeah.
would be millionaires. We'd be all just laughing,
Yeah.
swimming in money. But I
Right.
can't. Okay, but this is what the experts, the professionals say, is that the general blanket statement right now is that interest rates will fluctuate like they have been. And I think at this point, it is definitely very up and down, right? Right now, rates, are steadily going down because of predictions. And then as soon as they make the prediction, oh no, they went up. Like this literally happens every other month. If you guys haven't noticed, it's the same thing over and over and over again. And another piece to that as well is that housing markets are doing really well. And I understand affordability is an issue, but we were looking at the overall picture, right? Because housing demand is high, it doesn't make sense, unfortunately, for them to drop rates because demand is so high. If we had a lot of supply and a very low demand, they would want to shift the rates lower to get more people enticed. But because there's limited inventory and so many people looking to become homeowners, I don't really see them dropping rates to like 4% or something, for example, throughout this. I think they're going to kind of stay where they're at and kind of just move up and down 1% like they have been over the last year.
Yeah, that's, I mean, I guess if you're, it's, it's always bittersweet, right? How things move, right? So, great house prices are going up. Man, I don't have a house. I need to buy one quick. Or, I already own one. So great. I got the equity, right? I got a low rate, but I want to pull cash out, but I can't really, I don't want to lose my rate. There's all these different kind of nuancy things, right?
But that's what I do on the channel. I break those things down. Like I did one. Do a cash out, you do a HELOC. And then try to break different things down on like how you can position yourself just in the best financial position. And again, I know that you guys don't do this every day where you're like wheeling and dealing with real estate and finances, but that's what you have me for as a resource. Always happy to help. And you actually do talk to me. So, and a lot of people have taken advantage of that. So I appreciate that. But again, Jason, thanks for having me on again. As usual, it's a pleasure.
Yeah, absolutely, David. And the one thing I'm going to throw out here to everybody is, the point that he just made about spelling out all these different scenarios on his channel with every kind of scenario you can think of. And guess what? If you have a new scenario, reach out because he would be happy to talk to you about it. And then he'll probably do a video on it too.
Exactly.
So do that because here's the deal. This is the reality. Picking plan A might cost you $10,000 or more than plan B. And you might not even know about plan B, and you might think that plan A is the only option. So having an expert in the field who's looking out for your best interest is really a great thing, right? So please check him out. Subscribe on his channel, get that information, share it with your friends and family members. Even if you have a family member that's not a veteran, David could still make sure that they get in the right type of program and get the right type of loan with the right type of care, right? Referrals from the veteran community are treated very well, right? And that's what David does. So, all right. With that, thank you guys so much for watching. Thank you so much, David, for being on here. We appreciate everybody so very much. And, remember, if we don't take care of each other, something went wrong.